Hi guys, my name is Joy Ofili-Yebovi, and I'm here with a mother and daughter duo. They are mortgage brokers specialists, and today we're going to talk about the mistakes first-time home buyers make every time they want to buy a house. So, what are the top mistakes you see first-time home buyers do?
Do you want to go first or me?
You go first.
I would say that when somebody's buying a first house, being a first-time buyer, people often think that just because you have 5% down, that automatically you will get a house. And yes, having a minimum 5% down payment is very important. However, there are other factors that we look at, such as income, the debts that you have, and there are some other factors as well.
Like what kind of factors again do you see that influence that they make a lot of mistake on that?
Well, one thing they make a mistake on often is their credit, because sometimes they come to us and they say, oh, I just paid off my truck, or I paid off my credit cards and closed them. And actually that can cause your credit score to go down because then you have less available credit. And so really you're better off to make no changes and talk to a mortgage broker like myself or Kat, so that we can advise you once you're ready to buy, okay, I would pay this down or I would pay that off, but keep as much money as you can for now in your bank account, and don't be paying things off and closing them, because it actually could hurt your chances of being approved.
I, as a realtor, I see these mistakes. Most people from my own country make that mistake, and some other countries, I think. They come in, they have, let's say, 20% down, and they feel they can dictate the amount of house they can buy. They want a $500,000 home. I'm like, no, it doesn't work that way. What have you experienced that? Have you seen that?
We have.
Yeah, we have, where it is a little disheartening if someone just started a job or doesn't have an income yet, or just bought a $50,000 truck, and it's like, unfortunately, there's something called lending ratios that we have to use. So when we get an application, we run all the numbers, and it's not her or I or even the banks that are determining if they can or not. It's these ratios that physically show us that have to be under a certain number if they qualify or not. So yeah, that would. Yeah.
And also another mistake I see a lot of first-time home buyers make, buying a car first.
Yes.
Oh my gosh. Yes, it's way easier to be qualified to purchase a vehicle because the parameters to be able to purchase are way lower and easier, but to buy a house is difficult. And that's why Canada has such a stable housing economy. And even in the States, like 10 years ago when they had some problems, we never had that in Canada. And it's because our banking system is very stable, but that also means that it's harder to qualify for a mortgage.
Yes.
And so always get your house first and then get your vehicle.
I keep telling people, well, what about the people that have already put themselves in that kind of situation? They've already bought a car.
There are ways to extend the amortization of a vehicle. Like we've done it quite a few times with clients where they come in and their interest rate is high and their monthly payment is high, and our lending ratios, as I said before, aren't working. So there are some resources that we have, just like another broker might, where they will look at your vehicle and the lease agreement or the loan agreement you have, rewrite it, and then that way your monthly payment goes down and it can help out the lending ratios into buy a house. Other than that, like there's,
That's exactly right. And sometimes we'll have someone who maybe has an extra $15,000 worth of credit card debt, and we can actually have that rolled into the new vehicle loan and have the payment a couple $100 a month less. And that's just enough for them to be able to purchase a house for $400,000 that they couldn't have before.
Depending on what their income is.
Yes.
And their other debts.
Yeah. And it's kind of like apples in the air, and you're juggling them. You have your income, you have your credit, you have the size of your down payment, you have the quality of the house, and they all have to work together.
And it's such a big problem because I'm from Africa. And we don't do mortgage. We don't do credit. We buy it. You
buy it and that's your house for life. Like that's it. It's done. It's set.
So to get them to understand how mortgage works, how credit, especially the credit, we don't do any credit check and all those things, how it works. It could be a big problem.
Challenge, yes.
Well, yeah, and like even people born in Canada have no idea how this works. So never mind someone moving here and it's like, what is this? Like, no kidding, what is this? Because there's people who have been a part of the system since birth, and it's still
like my dad, for example. He's never had a mortgage in his life. He's never had a loan. He was old school. He grew up on a farm.
Oh God!
And so he says he has perfect credit because he's never owed anybody anything. And it's like, Dad, in Canada doesn't work like that. You have to have a credit card, maybe a loan, maybe a line of credit. And the banks will start you small, and then they test it. And if you make your payments, then they increase it, and then they give you more. And it's a game, it's a dance. Where
a lot of people don't use their credit card.
Yes.
I have few clients that they've given 3 credit cards. Said, no, I can't. It's in my room on top of the shelf. I can't.
And I'm like scared, and I get it.
Yeah, they're scared.
I get it.
Yeah.
But they need to use it at least twice a year so it turns over, so it doesn't get canceled.
But twice a year, would that help them with their credit score?
Well, not if they're new, right? If they're new, they need to use it more often. But I'm saying that if they've already had it for, say, a number of years and they're still nervous, they're going to charge it up, they still need to keep it a little active. Don't cancel it. Don't close it. Don't cancel it.
A lot are canceling. I'm like, no, you can't cancel
and
it.
logically that makes sense, but that's just not how it works in Canada. The more credit products you have open and that you're using, the higher your credit score is. And the magic number is
222. So so like it's 222. Okay, so 2 having 2 different forms of credit. So that's like a car loan, a credit card, line of credit, whatever. So one of those 2 makes your score stronger, higher, as well as having it for over 2 years. So if you have credit for like a year, it doesn't have as much like significance versus if you had it for 3, 4, 5 years. And then
minimum of 2.
Minimum of 2. And then the limit. So on a credit card, $2,000 is kind of like the benchmark of like where it really starts to help you and count. So the 2 years, $2,000, 2 forms. That's the 2.
That's kind of the magic, is a bare minimum.
Yeah, that like helps a client to be able to establish
with 5% down.
Yeah, and there are other factors. That's quite a complicated topic, but that's kind of a nice gist. So
okay, like I said, I don't think I introduced them. I just said it well. I want you to know their names. So I'm
Kat.
And I'm Lorie Budro, and we are
your favorite mother-daughter mortgage team.
And I love that about them. I mean, that was what attracted me. It's so nice to see mother and daughter. You know, one day we should do another video about mother and daughter and all those kind of things.
And the good and the bad.
And then the ugly, all of it. Yeah.
Okay, we're going to do that, so watch out for that. But for now, we are going to help you out in the mistakes you shouldn't do for your first time home, okay? Before we went off, we were talking about the mistake of being pre-approved or pre-qualified. Please enlighten us on that.
So being pre-qualified is very different from being pre-approved. One holds weight and one doesn't when it comes to purchasing a house. So being pre-qualified is basically going into an app or talking to a mortgage broker a little bit or talking to a bank, whatever, and you tell either the app or the person what your annual income is, what your debt is, what your savings are, and numbers kind of generated for what you're pre-qualified for. Now, that doesn't hold weight because there's been no documents looked at. Nothing's been verified. Credit has not been pulled. And so that's what a pre-approval is that
that's what we do.
That's what we do. So like all the documents have been looked at. Everything's been checked over. So say we're working with clients and we pre-approve them for $450,000. That's how much you're qualified for. And that's how much when you're a winning bid on a house, mortgage gets sent off to a lender. That's a number that we are like, guaranteeing is a big word, but like
because the house has to be approved as well,
right? So there is other little factors like that, but like that's what you can be approved for. Generally, is what we're saying there. So
yeah,
and that's why I tell clients, I tell them, look, you have to work with a professional. You can't just decide. It doesn't work that way in Canada. And again, there's another big mistake I personally see. They are pre-approved for 500. They want to get a house that is 500. I am. For me, as your realtor, I take it you're not just a client to me. You're a friend. I want something. I make this every time I tell my clients. I say I want something that I'll call you and I won't be scared, or you call me, I'll be scared. I want to be able to like, can I come over for wine?
Yeah,
yes.
You want them a client. You want them a client forever, right?
Forever. So yes, there's a client I'm working with now. I'm like, no, just because you are pre-approved for 500, that doesn't mean you have to do that. I want something that you can say, look, I call you, you are in Bali, you are in Tanzania, you are in Mexico, you are having fun, you are living life, not just living to work yourself every day to be able to pay a mortgage.
So I can comment on that. Yeah. So I always tell our clients that we can tell you what you'd be approved for, but we can't tell you what you actually can afford. And there's a difference because sometimes people, like you said, travel and they, and let's face it, you want to, live a good life. And so maybe then you can only afford $2,000 a month payment versus somebody else who, doesn't go out to eat, doesn't travel, and maybe they have a big family, they need a big house, and they can afford $3,000 a month. And if they might have the same income, but they're redirecting their spending in a different way. And so we do work with our clients to make sure that it's comfortable for them.
Yeah.
I always start the conversation by saying, like, you tell me what's a comfortable amount per month.
Yeah.
And then I would plug that into our computer to make sure it also aligns with how much they can be pre-approved for. And sometimes they can be pre-approved for, like you said, $500,000. But in reality, if they want to have a good life and do other things, they might only spend $400,000 to keep that payment in check.
But that being said, doesn't mean if you can really afford the 500, you can't go on. But I'm just saying that I want you to, of course, as your realtor, I want you to really think about it.
Yeah.
Know what you want. If you tell me go ahead, fine. No problem, but I want you to be comfortable as well. You're just not a client to me.
Right, and know what they're going into, right?
I want you to know so that you won't say you weren't well informed,
Or that you're house poor, right? That's an expression in Canada, you're house poor.
Yes.
And especially in Toronto and Vancouver, where it takes like 4 people to buy a house and the payment is so much and they can't even have furniture, they can't have a good life.
Especially that furniture, you buy a house, you've forgotten you're going to be paying bills now.
And there's bills. And like if like there's something that needs to be fixed or something, like you never know.
Yeah.
You never know when something's gonna go. Like it'll be winter and that's when your furnace is gonna go. And it's like you can't.
And we have good mortgages for that, though.
We do have good mortgages for that.
So as a mortgage broker, we have over 25 different lenders we work with, and we have a handful of them that do offer a home warranty that comes with the mortgage. And for 1 year's time, if your plumbing, your heating, your cooling, electrical, breaks down,
You see?
you get
See
that
why
for
we
free.
need that?
Yes.
You see why we need them? All those information are very, very important. You should be able to buy a house. You should be able to buy a new furniture. Live life. I tell people, don't rush to get the car first.
Oh, no. Yeah.
Get
the car later. Like Uber or buy a used car.
Yeah, buy a used car.
Or share with someone you're living with. Like that's honestly a great idea. Like how often, especially people, how much they they work from home now, or like carpooling. Like it's like for every person in your house to have their own vehicle, like absolutely is a luxury. But I don't know.
Would you rather live in your car or live in a house?
Oh my God. I mean, that's a good, honestly fair. Like that's some valid points.
Where it's warm, you could live in your car. Not so much in winter.
No, winter. Oh my goodness. It's going to be crazy. Okay, guys. Thank you so much. Like I said, I'll be calling them not just for mortgage, because this channel is not just about business. Yeah. It's like I call it Discover by Ofili-Yebovi. So we need to discover so many things, where to go to, where to hang out.
And learn from each other.
And learn from each other, what she did to get her to be a good daughter like this. I want such. I want such. You know what? Where she went very right. I want to learn from that. We learn from each other. We discover so many things. Like, I'm new in Canada. There are many places I have no idea where they are, what they do there. I want you to tell me, oh, Joy, have you been here? Have this drink. Go here, do this.
And you know what? In reverse, you tell me the good places to go in the world where, I should check things out and vacation.
My friend just told me about Bali. You need to see that. I'm going for Bali next year.
I'm actually going on a trip next week.
Where?
I'm going to Cayo Coco in Cuba. Yeah, I know it's my first non-work.
I'm going to smoke the cigar.
Cigars? Maybe something else.
You got a handsome man.
No, she can't say that. Mom is here, so she can't say that. She's 27. She can say that. She's okay.
I'm like blushing now. I can feel it.
Hold on. Okay, thank you guys for watching. Like I said, I will be inviting them next time.
Sure.
We're going to talk about different things.
With wine.
With
wine.
With wine. She's carrying the bottle. I'm carrying that. This is Joy Ofili-Yebovi. Thank you for watching. I'll see you guys next time. Bye.